Hello traders, Gary Wagner here, just about 10 minutes to 10 in Honolulu, 10 minutes to 5 in New York. It is Thursday, 4th day of August, and this is the Daily Report for Gold and Silver. We are showing nice moderate gains in gold today, trading up about $2.50. Of course, Bank of England came out with an announcement about a new stimulus package that they're going to begin, and that, of course, is extremely bullish for the precious yellow metal. We currently see gold trading at $1367.20. The low on the day has been $1355, and the high on the day is $1371. Both of those numbers are interesting, especially that high at 71. Of course, we'll talk about that in just a little bit. Let's take a look at silver. Silver actually closing off 0.13%, a little over 1/10% today, to close at 20.34.5. The low on the day has been $20.06, and the high $20.51. Let's take a look at our first chart. So traders, absolutely no doubt, a nice recovery today after yesterday's inside but lower trading day. We are looking at COMEX futures. This is our continuous contract. Of course, at this point, it is based upon the September contract. And what interests me really is the series of highs that we've hit recently, because as I said, we've got, in terms of our basic count right now, we're under the belief, and this, of course, is a green 3, as I call it right now. I believe we've hit wave 1, we've hit wave 2, I believe we've completed wave 3 and completed wave 4. We're currently in wave 5 of a green 3. Now, when we look at it in that way, we are looking for 5 in terms of a model to be about equal to 1, which is where we've come up with our basic forecast. I am going to show you a revised forecast of what we're looking at in a second, and where I plan not only this particular wave to go to, but the upcoming waves to go to. But what we have to first overcome, because I do believe it's going to trade over $1,400 an ounce, but before we get there, we've got to overcome this most recent top, which sits at around, 79 in terms of the continuous contract. We can absolutely see that that's what the market's been flirting with, and that's any kind of headwinds that we have seen, of course, are coming in on a technical basis right at this level. Of course, the announcement by the Bank of England today certainly inspired this move up, and this was a move up within the confines of the dollar getting stronger today. So as I said, I do believe we will break through this. We almost have to, but as I said the other day, whether or not we see the market come in, dip a little bit, and then move back up, as we are possibly seeing now, or that dip is a little bit steeper, is something that we will have to kind of wait and see how it unfolds. We do have a stop in place. That stop is held, and I do believe that that stop should be good, because unless we get a series of lower lows than we've seen recently, today and yesterday we had higher lows, that stop should be all right. Now, I talked to you about an updated forecast, and let me go ahead and move this chart in that I'm looking at. Now, this, of course, this is a weekly chart, and within that weekly chart you can see that we've put in a lot of the key areas. Of course, we had our major fifth here, and that concluded, this is the 5 out of 5, went into this long corrective period, wave 1, wave 2. These, of course, are going to be intermediate, 3, 4, and then 5, intermediate 5. So that's what we're looking at here. That concluded a major A, and this is the count that we have been working with. So I've kind of changed this subcount here, which is a minor subcount, so you can see how that relates to what I'm calling a green 1 or a green 2. That would be your minor count, and when we look at it in that way, this is what I'm looking at. Now, what we're seeing right now is we've had our 1 through 5, and this completed this minor first wave here. Then we had our A, our B, and our C, and that, I believe, completed our minor 2. We are currently within a minor 3. That minor 3, as I said, my sense is that if in fact we have a 1-to-1 relationship, we could see this market go as high as about 1400 to about 1437. However, this is a new part of the model, And you have to realize that we have to fill in the data here before I feel more solid about this, because I put in some different levels. But let's assume for a second that the market, in fact, has the ability to move up past 1400 to complete this wave. As I said, we have a minor third in the subcount, 5 out of this minor third. We would then go into our green 4. Now, green 4, I'm just plotting at a 50% retracement. Now, realize it could go to 61%, it could go to 38%, but I'm just trying to get a mid-range, and then what I'm doing is calculating a one-to-one relationship. That one-to-one relationship would, in fact, take us, and this is out in time, and this is a longer forecast than we have seen, but that would actually complete this A wave, and this one here. And of course, that to me would be a pretty interesting move in fact, because from there, this would be an A. We would get some sort of a B retracement. Realize that on this B wave, it's a counter trend. So we'll count our way up to A, we'll get a B down, and then a final C up. That, I believe, is the best model I can give our subscribers at this point. As far as our current trade goes, absolutely, we are maintaining our current long position. We are also maintaining our current stop. We'll talk to you after the jobs report tomorrow. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. Bye-bye.